Welcome to Woods of Stardon. This is CH. I will be covering the Amundi Prime USA Fund in this video, which is a refreshed version of the video I did last year. This is part of my Absolutely Biased Comments or ABCs series, whereby the aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. Amundi is a French asset management company founded in 2010 from the merger of the asset management businesses of Crédit Agricole and SocGen, two of the leading financial institutions in France. Crédit Agricole has 80% ownership of Amundi, while SocGen has 20%. Amundi IPO'd in 2015 in the Paris Euronext and has been growing strongly through organic business growth as well as multiple acquisitions. Today, Amundi manages about 2.4 trillion euro worth of assets, making it the largest asset manager in Europe. Amundi changed their corporate information reporting format and doesn't seem to provide AUM breakdown by regions and client types anymore. Instead, the corporate brochure now shows the full suite of offerings including research, investment, technology, and various fund-related services. The AUM by investment product category is found in the Q4 2025 results announcement that looks pretty diversified with bonds and equity solutions being the main offerings. The Amundi Prime USA Fund is a sub-fund under the Amundi Index Solutions Fund family, which covers a long list of index-related solutions of both passive and active managed nature. The fund family is set up as a Luxembourg SICAV structure and is UCITS qualified. The fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. The Amundi Prime USA Fund does not provide any information on the manager or investment team handling the fund. Morningstar does provide some names and their time periods involved in the fund, but doesn't have any bios available. As such, I am not able to comment on the capabilities and experiences of these people, nor their specific responsibilities in the fund. The Amundi Prime USA Fund is a passive indexing fund that tracks and replicates the performance of the selective GBS United States Large and Mid-Cap Index. This is not really a common index used to represent US equity markets, so let's take a few minutes to go through this index. Selective is a relatively new indexing company founded in 2007 and is better known for creating customized indices for global investment banks and asset managers that have funds, ETFs, and index-linked structured products that require unconventional indices or indices that have specific rules or requirements. Selective is a German company, and many of its founders and management team come from Deutsche Bank's structured products business or institutional business, which is where the specialization of Selective's business direction comes from. The Selective GBS United States Large and Mid-Cap Index is part of Selective's Global Benchmark Series or GBS and covers the largest 85% of the free float market cap of the US equity markets. This currently translates to around 420 constituents in the index, which means it is almost the same as the more popular S&P 500 index. The number of constituents is not fixed and was higher at around 450 about a year ago when I first covered this fund. But because the mega-cap companies have grown even larger and took up a bigger portion of the market by size, this has led to a reduction in the number of constituents in this index. The NTR at the end of the index name refers to net total return, which means the calculation is net of taxes and assumes dividend reinvested. I will be comparing the portfolio construct and performance of this fund versus a S&P 500 ETF to highlight any differences. The fund prospectus provides a clear summary of the index and its key characteristics. The index is based in US dollars, with a quarterly rebalancing process. Daily index data points are calculated based on the official closing prices of the components using Reuters FX rates as of 4 p.m. GMT. As mentioned earlier, the Amundi Prime USA Fund is a passive indexing fund that tracks and replicates the performance of the selective GBS United States Large and Mid-Cap Index. The fund will normally adopt a full physical replication approach, meaning it will invest directly in the same constituents as per the index and as close as possible the same percentage allocations for each constituent. It is however mentioned that the fund can use synthetic replication via derivatives if needed. The prospectus mentions that the tracking error is anticipated to be up to 1% in normal market conditions, although I would expect it to be much lower given the US large cap markets is a highly efficient market to trade in. The Amundi Prime USA Fund was incepted in 2022 and currently has almost $1 billion worth of AUM. This is a decent size for a passive index tracker, although it is certainly much smaller compared to the popular US equity ETFs in the market. There are quite a lot of US equity index solutions out there, so competition beyond the top few is quite tough. That being said, the AUM has doubled compared to about a year ago when I first covered this fund. Here we have the sector breakdown as of end 2025, based on the fact sheets of both the fund and the most popular US equity ETF in the market, that is the SPDR S&P 500 ETF or SPY. We can see that there are some small differences in the numbers, although none of them amount to more than 1% difference across all the sectors. Top 10 holdings look nearly the same as well, with one notable difference, that is Berkshire Hathaway. This stock is missing in the top 10 of the Amundi Prime USA Fund, and on checking the Selective Index webpage, the stock is listed number 52 in the index, with only around 0.7% weight allocation. This is possibly due to the free float market cap calculation logic in the index and should impact only a handful of stocks in this universe. The Amundi Prime USA Fund doesn't come with a lot of share classes. Only the AUC US dollars and ASC Sing dollars unhedged share classes are offered in Singapore to retail investors. The fund does have Euro and Sterling Pound currency classes, but not registered for the Singapore retail market. The share classes are available only in accumulation version, which is good for investors that do not want to trouble themselves over the small distribution yield from typical US equity ETFs. The bracket C stands for capitalization, which is the same meaning as accumulation. Amundi does it really well with recurring costs in this product, with only 0.03% management fee, and after adding other expenses, a 0.05% total expense ratio or TER. This is comparable to most US equity ETFs in the market. Given the fees are so low, there are no trailer fees to be shared out, so some distributors may not carry this fund for this reason. Amundi does allow distributors to charge up to 4.5% subscription fee though. Given this is a passive index tracker, I would suggest investors to ask for the same rate as with normal ETF transactions. One downside with this fund is a relatively short track record, since the fund was incepted only in 2022. While this doesn't really impact the fund portfolio or performance, it does inconvenience investors who want to run performance comparisons versus other solutions. At this point, we should address the question of why consider a passive index fund like the Amundi Prime USA Fund instead of going for the wide range of S&P 500 and other US equity ETFs available in the market. There are a few possible considerations here. The first is the availability of specific trading currencies. US listed ETFs tend to be traded only in US dollars, and Europe listed ETFs tend to be traded only in Euro, Sterling Pound, and a handful of other European currencies. Sing dollar investors, for example, will have difficulty finding ETFs traded in Sing dollars and therefore limiting their investment choices significantly. Fund providers can easily create new currency share classes as long as there is enough demand from investors. This fund currently has a Sing dollar unhedged share class catered for Sing dollar investors. If there is further demand, the fund may eventually create a Sing dollar hedged share class as well. Another consideration is that with a fund, investors are trading directly with the fund provider instead of trading ETFs on the secondary market on the stock exchange. The fund therefore offers a clear single NAV per day for both buy and sell orders, as well as a specific dealing cutoff time, with no premium or discount gaps to worry about. Liquidity is also guaranteed by the fund provider, so investors do not have to worry about their orders not getting fulfilled. This suits investors who like the convenience and simplicity of the order process in mutual funds. Of course, the opposite is true, where ETFs would cater better for investors who prefer to trade real time as market moves. The third consideration is more on the US withholding tax on dividends, given this is a US equity-only strategy. The fund handles this aspect internally within the fund structure and investment process, so investors do not have to worry about it, and the fund performance is already net of such taxes. This is similar to Europe-listed ETFs. The last and most important point is that the fund should come with a low cost and that it should be able to replicate the performance of the market or index well, just like a passive ETF. The very low fee structure of this fund was already mentioned earlier, and we will look at the performance next. The Amundi Prime USA Fund provides performance data of various time periods in its webpage that shows that the fund has been quite consistently tracking the selective GBS United States Large and Mid-Cap Index with around 0.1% tracking error over time. While the tracking error is slightly higher than the fund fees, it is a small number that looks to be acceptable. The index is, however, not the commonly used S&P 500 or MSCI USA indices, so let's run some comparisons. Here is a comparison of the fund since inception versus S&P 500 and MSCI USA indices as represented by the respective iShares UCITS ETFs. We can see that the three products representing three different indices have done really similar over time, with the fund lagging behind very slightly versus CSPX. Shifting to a shorter 1-year time period, the same is observed, with the fund less than 1% lower than CSPX, showing that the selective index can be considered a close enough match compared to S&P 500 or MSCI USA indices, which also means this fund is suitable to be used as a passive coverage for the broad US equity markets, just like the other popular US equity ETFs. Next, let's take a look at the Sing dollar unhedged share class. The performance difference comparing the two currency classes is simply the result of the FX movements of the Sing dollar to US dollar currency pair. And as seen in this chart, the Sing dollar unhedged class lagged behind the US dollar class quite a lot, as the Sing dollar class generated 6.7% lower returns than the US dollar class in 2025 alone. This performance gap is so big that it would have been better to go for an active fund with higher fees that has delivered about the same performance in US dollar terms but offers a Sing dollar hedge share class, such as the AB Select US Equity Fund. As seen in the chart, the Sing dollar hedge share class has about 3% currency hedging cost that is still better than the Sing dollar unhedged class, with over 6% loss to FX movements. Sing dollar investors therefore have a tougher time in the current market environment, whereby going for cheaper fee solutions may not necessarily generate better results. Therefore, more time and effort is needed to study and understand the products better. It may also mean that having some US dollars set aside for investments for long term may be useful for Sing dollar investors. With that, let's summarize our findings. Amundi is an established global asset management firm and the largest asset manager in Europe, managing about 2.4 trillion euro worth of assets. The Amundi Prime USA Fund is a passive index solution tracking the selective GBS United States Large and Mid-Cap Index using a full physical replication approach. The index is less commonly seen and used in the market compared to the popular S&P 500 and MSCI USA indices. That being said, the index construct, components, and performance has been shown to be near identical to the S&P 500 index. The fund charges a very low 0.05% TER, which is comparable to most ETFs in the same category. The fund has also exhibited low tracking error of around 0.1% over time. The fund, however, was incepted only in 2022, giving it a relatively short track record compared to many established passive US equity solutions in the market. The main selling point of this fund is that it is set up in a mutual fund structure, providing different transaction and liquidity terms compared to ETF structures, and would appeal to investors who like the mutual fund structures more. The fund offers a Sing dollar unhedged class. As mentioned earlier, this is useful for Sing dollar investors who have difficulty finding similar ETFs trading in Sing dollar terms. However, the FX movements in the current market conditions is resulting in a significant performance gap for the Sing dollar unhedged class. It might be good if Amundi can create a Sing dollar hedge class for the fund to tackle this problem. In conclusion, the Amundi Prime USA Fund essentially provides an efficient vehicle for investors to access an exposure and performance similar to the S&P 500 index through a mutual fund structure and with a Sing dollar share class. This concludes my absolutely biased comments on the Amundi Prime USA Fund, and I hope it will help in your investment journey. May we all grow wiser and prosper.